Yesterday, Bitcoin and altcoins dumped a pretty substantial amount, and it was honestly the easiest short of life. First things first, the only indicator that you need is market cipher B, okay? I stay true to that. That is the only indicator that you need when trading, and this entry was so freaking easy. So if you don't know, this oscillator here on the bottom serves as an oscillator, but it's a bunch of oscillators in one, and I created a term for this oscillator which is called spike waves. Okay. If you don't know what that is, I'll put a link at the end of the video so you can go watch that. But essentially, long story short, a spike wave is where your momentum waves and your money flow are diverging. Okay. A divergence is where your oscillator is doing something different than the price. In other words, if your oscillator is making a lower low, yet price is making a higher high, that is a divergence and will likely result in a correction. So yesterday, we had quite a bit of a correction. And if I fast forward here, you can see that we actually fell, a few $1,000s, and it was a very easy entry. Okay. So when we are looking at market cipher, we are always trying to identify spike waves, right? Which is money flow coming out and momentum waves coming down as price is making a higher high. So whenever you're in a range, you're always going to mark the high of the range, because as soon as you take the high of the range, you're going to be looking for these divergences. And in this case, these spike waves. And this short yesterday was so easy because we had spike waves across the board. It was like a multiverse spike wave, a spike wave on all time frames. And I'm going to show you here right now how easy it actually was. Okay. So we took the high yesterday. First things first, you could see that we were ranging, and objectively speaking, over time, here on the 15-minute time frame, you can see that money flow was coming out over time. Now, a lot of people think that you cannot take waves across time like this and say that that counts. Well, guys, I'm here to disprove that theory, because all this does is show you the higher term time frames more zoomed in. Okay, so if you have momentum waves over time diverging and money flow over time diverging on the 15-minute, all that indicates is, for example, on the 2-hour time frame, what you would consider proper divergences. Okay, so here now you can see on the 2-hour time frame, you have proper divergences in what some people may believe. So now that I have debunked that myth, okay, you can see that on the 15-minute time frame, we had money flow consistently coming out of Bitcoin over time as we made a higher high. If we come on the lower term time frames, like the 5-minute, you can also see that when we had this little spike up above this level, that at the time of the spike, we had money flow coming out of Bitcoin. And so when you come and zoom in here on the 30-second time frame, and yes, guys, I actually do enter on the 30-second time frame. Sometimes I also use the 15-second time frame because I understand where I am in the charts and I live in the multiverse of market cipher. So when you come down to these lower term time frames, you can very clearly see that we have spike waves, okay? And the key to this trick, guys, is it has to be an SFP, or it has to be above or below a key area, which in this case is your range high, because in how else could you get a divergence if price is not diverging from the oscillator? You would have to make a higher high. You would have to break the range high in this case for shorts. So as we broke the range high, you can still see the thicker the money flow, the more chances of divergences. So you wouldn't short here, and you wouldn't put your stop loss here, because there's a chance that you could get wicked out. And so would you have shorted on this second wave? I mean, you could have, because it did give you the divergences and money flow is slightly coming out. However, we do know that the thicker the money flow, the more chances of divergences. Another rule that I employed when it comes to market cipher. And so at this point, if you still don't like the way that it looks, you could say, you know what, I'm going to wait for the next 30-second wave, which would have, in this case, given you the actual perfect entry, right? If you employ the thicker the money flow, the more chances of divergences, this would have been the better trade, because it would have given you a clear as day spike wave, and you could have shorted this guy all the way down. And by the way, they even gave you a retracement into the golden pocket. This was literally the easiest short that anybody could have ever taken. And that's how quick of a video this needs to be for me to show you how easy of a short position this was to take if you were watching it. Now, full disclosure, I didn't take it. I wasn't at the computer. I was doing other things. I was DJing, whatever. But it was literally as easy as this, guys. And if you can identify these at the highs and the lows of the ranges and just set alerts, put an alert on the high of the range and say, all right, if we get here, I'm going to check market cipher B. I'm going to start looking for spike waves. If I see them, I'm going to jump down to the 15-second or the 30-second time frame. I'm sure the 15-second looks similar as well. Let's come down to the 15. Look at this, clear as day, 15-second money flow pouring out. Vector candles coming into the high, Big wick, down you go, okay? So very easy trade to take, and this, guys, is why, honest to God, the only indicator that you need, the most powerful indicator out there, no BS, is Market Cipher B. If you are looking to purchase Market Cipher B, I do have an affiliate link down in the description down below. It is a free way to support me at no extra cost to you, just like hitting the like button. So if you use discount code GEO, you will also get 15% off. Guys, that's it for today. Very easy entry. Very, very easy entry. I'll see you next time.